Today is Monday, October 21st, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. Today's guests are Steve Freed, Vice President of Grain Research at ADM Investor Services, and Alan Bush, ADMIS Senior Financial Economist. Steve, let's start with the grain markets this morning. The Hightower report is suggesting buying March 980 soybean calls. Do you agree with this strategy?
Well, personally, I don't. I mean, I can see what they're looking at. They think that, first of all, the crop's going to be smaller and that China will buy a little bit more beans. They're looking at a carry-out around 330 million bushels versus USDA's 490, and last year it was 913. So they think that there needs to be a higher price level. I just think that we're waiting for a deal, and we've got a lot of help from the lower dollar, but I think that there's plenty of beans in the world, and I think that South American weather is improving, and so I probably wouldn't buy the calls. But if I'm like long futures, I might buy puts to protect myself, because we might get a better move in the futures market and maybe not as high as 980 versus buying the call for 26 cents.
The report also suggests buying March KC wheat. What do you think about that recommendation?
Every day I get phone calls and emails about how cheap Kansas City wheat is and how much of a discount it is to Chicago wheat and how much of a discount it is to corn. And the two problems that I have with it is, number one, it's a low protein crop, so nobody wants it, and it doesn't have the demand. That's why you have such a steep discount to Chicago wheat. And secondly, we've had a rally in wheat in the last 30 days. It's because of the Russian situation. The prices are rallying there, and the funds usually trade that in Chicago and not Kansas City. The farmers are probably going to plant a fewer acres in wheat next year, but if we have a normal yield, we'll have plenty of wheat. And we have, so far, problems in Canada, maybe some dryness in Australia, but I think in general, we tend to make tops in wheat in November and December, and so I don't know if we'll get that kind of rally. We've had a good rally so far, but I don't know if it's going to have follow through.
And Steve, what is the latest on the U.S. 2019 corn and soybean harvest and the crop sizes?
We're running late, about a week to 10 days later than normal. I think the supply bulls feel that the crop is going to get smaller, maybe by as much as 140 million bushels in corn and 20 to 30 million bushels in beans. And at that, say that on the November report, we could get a bounce in prices. But the farmer has sold nothing yet. And so I think that once we get in further into the harvest, I think they'll let some of that grain go. And so I think the crop is smaller, but I think the farmer selling will keep a lid on prices.
Well, see, what is the net managed position in the grains? And you mentioned the U.S. dollar. What impact has the lower U.S. dollar had on prices, if any?
I think the lower dollar has helped commodity prices. The CRB index is testing the September high, and I think that continues to help if the dollar continues to be weak. I think the funds right now, they're long beans, they're short corn, but they reduced some of their corn short last week, and they're long a little wheat right now. So basically they don't have a big position. What they are trying to say in their position is they think there will be a deal, and it'll include China buying beans, but maybe not corn.
Turning toward the financial markets, Alan, can you comment on the Fed's plan to buy approximately $60 billion per month in T-bills to ensure ample reserves in the banking system? How important is this?
Well, I think that is extremely important. After many months of the Fed reducing their balance sheet, they are now increasing it. Now, Fed Chair Powell said do not call this QE4, so we're not going to do that. But it is basically a plan to expand the balance sheet. It's stimulative. It's very supportive to stock index futures. And I think it could be just another reason why I can expect to see stock index futures continue to work higher and possibly reach some new record highs.
Looking at the U.S. economy overall, Alan, how does it compare to the global economy?
Well, the U.S. economy seems to be looking a bit better now. Recessionary fears are, I think, receding. And one factor involved in this analysis is that parts of the yield curve now, as they said, some have said, have uninverted, meaning that the yield curve is now becoming more normal in certain parts of it. So that suggests a better economy than some had anticipated, at least for the U.S. Elsewhere, though, in the world, we still have some pressures in Europe and, of course, in Asia. So the U.S. economy, I believe, will hold up very well, although still slowing, especially, though, compared to elsewhere in the world.
Finally, looking briefly at the precious metals, why is the silver market performing better than the gold market recently?
Okay, well, if the U.S. economy is likely to hold up relatively well, that would tend to support the silver over the gold market because the silver has more of an industrial component. And in fact, that's what's happening today. Gold is steady to a little lower, and the silver is about 15 or 20 cents higher. So I think the gold will probably underperform the silver market near term, but both gold and silver, I believe, are headed higher, especially as central banks continue to cut interest rates.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.